Hi everyone, it's August 16 market situation right now for Asymptonex Global Market Update. Let's begin. Okay, so we are still proceeding to give you earnings updates because we're still headed into earnings this season. So let me give you a few things so far in the earnings updates. A lot of the funds have increased their positions on Palantir, SoFi, and Unity. Take note that all three of them actually reported good numbers. SoFi actually, in our view, had great numbers, but was actually sold down by the market by as much as more than 15%, from $17 all the way to $15, which is actually more of the support area. Take a look at those levels. Unity continued higher from 110 breakout. It's now trading nearing $130. Palantir broke above 24, now trading at 25, and has a 140% increase in funds. That is a majority of shares actually being bought by the market. This is a fund percentage increase. Take note that this Tuesday, August 17, we will see reports from C Limited. Take note too that crowd favorites like CrowdStrike, Cloudflare, Roku, Semaphore have also an increased fund increase this month. Datadog had a good number. Roku, in our view, also had a good number, but was sold down on the news that TCL was actually incorporating Google TV. Another news flow to say is that Pinterest still managed to have an increase in the funds despite a 20% discount after earnings from the decline on their monthly active users. You could see that the market necessarily is not always price reaction movement on the fundamentals. Also, when you take a look at the general observation, I'll tell you this. The market in general is staying to what they believe are the strongest. None of these are FAMGAs, but these are where the market is keeping their money. So far, we gave a moniker, Stacks the Apples, that represents your C Limited, your CrowdStrikes, your Zscaler. Your A here is actually in that time it was Amazon, but Amazon actually had a bad drop. Nevertheless, we do see that the company is solely staying clear into their high expensive growth names. Could see that Cloudflare, CrowdStrike, C Limited, Shopify, Square, Tesla, Unity, Roblox, Palantir, Nvidia, PayPal are getting a bunch of the rewards. And the general weakness for companies like Teladoc and Zoom is depicted very much in the general view that America's Delta variant will be solved. Hence, these stay-at-home names are still not as popular as before. You could see relative weakness on Teladoc, Zoom, Spotify, Netflix, Roku, Peloton, and general strength on the likes of reopening themes such as DraftKings, Penn National Gaming, Disney, Airbnb, and strength of DBI, Under Armour, Nike, Starbucks, Chipotle, Win. So let me show to you how the market is quite positioning itself after earnings season. So Chinese stocks continue to fall down. You'd see numbers actually confirm that Bilibili is still the largest website streaming in China, second to the likes of Youku. So just some news here. So there is a general viewpoint as well that foreign investment has withdrawn from Chinese concept stocks. But the truth is, Fidelity, Schroeder, and Bailey Gifford have actually increased positions in their Meituan, Tencent, Alibaba in July. This also shows that there are some people who are panicking, but there's also some who are greedy. So who are the ones who sold though? The ones who sold are the likes of George Soros and Cathy Wood. George Soros could be recalled to actually have bought Chinese stocks, specifically Baidu, VIP Shop, from Bill Huang's sell-off. They also bought Tencent Music and Discovery. It can be seen from the latest disclosure that they've already sold all of those shares within the month. So George Soros sold everything. However, the chief investment officer said that they are willing to jump in yet again and not just double down, but triple down with facts and circumstances support that. So we could see that we are seeing the trading mechanism in the market is happening. So let's take a look at that. In general, it is still somber to say about the Chinese stocks. Last Friday, Chinese stocks even felt a lower low for your Bilibili. This one breaking 77, and the next support of Bilibili is $72 and And if that breaks down, another support is found here at 64, but that's not a good look. Seeing the movement on Bilibili, you could already see that Chinese live streaming sites in general are getting still pummeled down, and your Kuaishou is now trading at 77. Despite an 80% down, we still haven't seen a majority of buyers step in, although the drop has been met with little volume for the benefit of the bulls. Let me show to you how the movement of Chinese stocks in general have been. Pinduoduo last Friday has still been falling down. So after a support here at 112 breaking down, you are seeing 112 fall down straight to the 77, had a rally to about 90, but then supported here at 84, which is very feeble because the volume here at 84 is very low. So it's not sure whether 84 can fall down further here at about 78, but you have to assume that the worst is going to be priced in Chinese stocks, and that is why you are seeing bearish front for the next foreseeable 6 months to 12 months. The general and Pinduoduo. So in general, the biggest names in China continues to remain on the low end. Notice that Baba, the low here is about 174, and today Baba is trading almost at the retest of that 174 or $180 today. You're also seeing Tencent continue sell off, despite the fact that the market actually tried to rally on Tencent a couple of days ago on that spiritual opium, as well as just the general overhang in Chinese stocks. You can see this one rallied from 428, rallied to 492, and has been falling down yet again, 449. This is a Monday, and that drop is telling us that it could continue falling down back to about 420 or 430 for Tencent. So still weak. We are seeing weakness in Chinese stocks in general. It's good to see, however, that Lenovo in the Chinese stocks managed to rise. This is a good earnings related news. So at some point in time, even if there are stocks that are really falling down, it's possible that Chinese news, company specific, can actually help stocks, in this case, Lenovo rallying to 820. And you could see that although Haidilao is still low, here about $30, it's still higher low from the $27. We do see as well that Chinese stocks will remain somber for quite a while. Another news to share, of course, is a lot of Chinese electric vehicles are actually falling down. Let me show to you what's been happening. BYD, some profit taking happening today. From $280, it's now dropping to $250. It could fall further to $200 after a blast of outperformance. 1211, 175, the movement is on the downside, which should show to you that from a general standpoint, all of your NEOs, XPengs, which was felt by the market that was not going to be sold down, is actually not as resilient. You could see lower highs from NEO, $56, $45, right now $41. It is expected that NEO would still be sold down even tonight. For support look, it could be 38 or 34. So generally speaking, despite good numbers from Chinese stocks, the market is generally staying away from almost all Chinese stocks, even XPeng. So you could see XPeng 45 has been a strong resistance. These are lower highs. Expect Chinese stocks to generally be very much on the downside. So that goes to show that there's really no buyers left in Chinese stocks. JD, no volume, but also somber. EHang, no volume, but actually very weak and somber, here at about $24. So from a sector look, the market is very much strong into crypto. So crypto has been moving up. You could see cryptocurrencies in general are very much all on the up 50%, up 80%, up 100%. We have just broken the $2 trillion mark in the crypto space, the entire market cap of cryptocurrencies. Let's just see it one by one. Bitcoin is $47,000. Some resistance at 48, but definitely a lot of buyers at $40,000 and $44,000. Your Ethereum is now trading at 33. Bitcoin Cash was noticeably at $700. Ripple was 1.3, Dash 200. You could see the general flow of Chinese of cryptocurrencies is actually very strong. Majority of the news was even on Cardano. Cardano is actually breaking near their all-time highs above $2 after a successful scaling of their network. So they're gonna have their Alonzo upgrade next month. So for more crypto news, you better go to crypto channels. But definitely, we are seeing as a sector cryptocurrencies have been generally on an uptrend, and it can be shown also in crypto stocks. Crypto related stocks have been on a rise. This is for the day. There have been profit taking once in a while, like BTBT falling down, but that came from $4 to $20, which suggests that there might be some profit taking of 7, 8, 9, 10%. But the general trend of cryptocurrencies has been still very much strong. Now, when I said that the general strength of high quality names have been strong, I'm talking about these related sectors like stocks, the apples. Let me show to you that while there was generally weakness sometimes in a single day, the general performance of these names like Cloudflare, Microsoft, etc., has been on a general tear. So 1 month, you could see Cloudflare, C Limited, all trading near their all-time highs. So Trade Desk, Sentinel One, CrowdStrike, just take a look at this. Sentinel One, there is some selling pressure, but the general movement of all these cybersecurity names have been quite strong. Sentinel One falling down 47, managing to rise. I'm not saying that it's gonna stay very strong, but the sector has been. Sentinel One is strong, CrowdStrike is strong here. There has been some drops, but we are generally bullish that these would be bought. The trade desk, some sell-offs at $90, but then definitely we think that this $78 has a buying pressure. So you see that the people are generally complacent about these high growth stocks. Square, even if it drops to 255, we generally think that the higher lows will still be respected for names like these. Take note though that despite the fact that Moderna reported very good numbers, the market is actually unwilling to buy Moderna, which suggests a huge drop on Moderna names, Novavax, and of course BioNTech. So BNTX. So far, great numbers from the vaccine group and a lot of COVID booster shots, says the bulls. But the charts are actually showing to us that it's still actually lower highs for these names. Let me just show to you a few news. A lot of news happening. Palantir in general, very good. SoFi's earnings, in our view, is a plunge, is actually a buying opportunity. We note that SoFi dropping to about $15 is more of a support area. Although there's this gap down, it could remain low for a while, but there is definitely fundamental support buying this SoFi today, and they're actually trying to get a banking license, which will lower their which will which will grow their margins, because a banking license allows them to use the deposits in the Sophie wallets, which are now 2.6 million members, to offer loans also to their members. So in general, Sophie actually had more than 100% triple-digit growth in members and products, which tells us that this drop is more of a buying opportunity rather than a sell-off to get afraid of. QS, ChargePoint, Bloom Energy, these general movements of fuel cells and solid-state lithium batteries, they rallied initially on the announced passing of infrastructure bill. You could see August 9, August 10, it was generally up. The sell-off in 11, 12, 13 could be, in my view, just a general reaction of buy the rumor, sell news. However, in my view, QuantumScape actually has done well in its milestones, although pre-revenue for these types of names, we are seeing that the market is generally bearish on most SPACs, special purpose acquisition companies, because of continued SEC regulation rather than company-driven sell-off. So QuantumScape, we are contrarian that this 70% drop from its all-time highs is actually more of an opportunity here at $21 rather than to get out. ChargePoint, also the same thing. ChargePoint is now trading at 50% sell-off from its peak of 48. It's now trading at 24. Of course, it can fall down here at about $20, which is a 60% sell-off. But in general, our viewpoint for these names, which are the leading charging station in America, so actually benefit from that infrastructure bill of $1 trillion and to get benefit of a range for the next 6 to 12 months. So unlike companies that actually are not going to benefit, I'd say the charge point will actually be still in a trading range for the next 6 to 12 months. ChargePoint, Bloom Energy. A few news on Bloom Energy. Actually, Bloom Energy got an order from Siemens. I'm gonna read to you that news. There is a lot of competition. Bloom Energy, Plug Power, fuel cells, but the market in general simply sold down after 3 days only because of a buy the rumor, sell the news thing. Nonetheless, you can see that most of these sectors, electric related and renewable energy, are mostly at support. So we are of the view that Bloom Energy here is more of a trading range rather than a sell off to get afraid of. You would see definitely a range here. Bloom Energy is trading from 20 to 24 in the short term and another higher range here at 28. So QuantumScape, ChargePoint, Bloom Energy, there's a lot of news that are saying that it could be a high risk but also high reward. I'm of the view that these are actually trading ranges. So there's too much emphasis right now by anyone on one quarter, but in my view, long-term investors should actually try to read through whether they're actually growing their sales and whether it's a company that they want associated forever or a trade. Since SPACs in general have more to prove, it's normal for people to trade it rather than to actually invest upon it. But there's definitely a lot of people who are bullish on those names. I'd also say that despite Chinese sentiment very low, let's just read some facts about Pintuotuo. Pintuotuo is going to report their numbers end of the month of nearing September, actually. So Pintuotuo has been user-centric. The number of annual active users has been as high as 800 million. So let's say it's not even 800 million. Even just 500 million of JD is still large enough. So millions of users continue to join Pintuotuo, benefiting from their interactive and helping merchants provide tools to better reach customers. Monetization has been a natural result. From interviews, you could see that Pintuotuo's Mai Tai and Tuoto Mai has been very much willing to help groups buy their groceries at a cheap price. Let's see this interview. With the scale of grocery shopping and community group buying, the local government had issued warnings to community group buying platforms. How will it affect community group buying competition? Tuoto Mai has only launched 2 quarters. It's a young business model. It's our strategic priority. Tuoto Mai helps us empower agriculture, and it will be a long process full of challenges. It's very impossible to say how big the current business model is, but we are continuing to increase our investment in logistics system and technology such as collection of orders. We've already reached an internal ROI target, and it will be better through technology in the future, understanding consumer needs. Tuoto Mai and Pintuotuo platforms are integrated, and users are using Tuoto Mai as an integrated experience and also purchasing other products of Pintuotuo. Has the payment rate for their transaction service revenue changed? Is the increase in revenue mainly due to changes in the number of orders, or there is an adjustment in the payment rate? So far, for Pintuotuo, revenues have increased by 180% and the payment rate has remained unchanged. The huge increase was due to the substantial increase in gross merchant volume because a lot of the food brought substantial revenue. In terms of new purchases, are users using Tuotuo to buy food, or are they using also Pintuotuo at the same time? The proportion of users of Tuotuo Mai and Pintuotuo is not within the scope of disclosure, but the frequency of user usage and interaction within the platform has increased. Users are using Pintuotuo as an entrance to enter and use Tuoto Mai. So Pintuotuo's Tuoto and Tuoto Mai is one with each other. There's no division between Tuoto Mai and the number of users of the entire platform. It can be seen today that Tuoto Mai is more like a competition for Alibaba's grocery shopping and actually also competition for JD's food-related department. So you can actually think of it as their version of Walmart, in which case people are really buying their grocery and food produce from Pintuotuo. What is the growth footprint of Pintuotuo in terms of business scale? Tuotuo Shopping now has 300 cities across the country for pick-up points. More infrastructure investment has been added locally. More mature in terms of investment, current income is mainly based on cash management, and it's investing more of operational expenses. Sales and marketing was just 12.9 billion. There are seasonal fluctuations in the first quarter, but the year-on-year increase is due to their great marketing intensity. With marketing efficiency improved and experience, this kind of expenditure will decrease over time. Tuwa Buy is more on fresh food services. Users are participating in Pintua's entire platform. Pintua's regional teams are paying close attention to the quality of operations and has created tens of thousands of jobs, both upstream and downstream. You could see these are the numbers reported by Pintuo in their first quarter report. And I continue to see that this company will report losses for the next foreseeable quarters. You could see the non-GAAP net loss here of 2 billion yuan versus a 239% growth of 22 billion yuan for Pintuo is brought about by their investments on logistics framework. I'd say that for most of the Chinese companies that are being sold down, especially Pintuato, Alibaba, and JD, I don't see a real drop. You could see that gross profits and EBIT is actually growing. But for Pintuato's sake, they're just someone that's really a collateral damage. User-based growth has been nothing but spectacular. It's going to be similar to how C Limited is going to grow and prove it this Tuesday. So although the profitability for their e-commerce front is negative, you have to understand that this non-profitability is done by the management forcibly because they want to grow their efficiency and cost operations. So I don't really have much problems. Also, some news for some Chinese stocks yet again. Wimi Holograms has a SPAC and it's going to go merge with V Algo. Micro Algo is expected to be completed by the third quarter of this year, committed to development and application of customized central processing algorithms, providing customers with comprehensive solutions, central processing algorithms with software or hardware or both, helping them increase in the number of customers, improving end user satisfaction, achieving direct cost savings, reducing power consumption, and achieving technical goals. I'm not quite bullish on the Chinese companies, but I have to read the news for you because in the short term, I do believe the Chinese stocks will suffer and there is still a large overhang and any rallies like 10%, 20% will be sold down. But you have to understand facts and data still and still read news about these Chinese stocks. Bilibili reports numbers this Thursday, and we know that daily active users of Bilibili has exceeded 65 million, surpassing Youku, and is one of the largest portfolio after Ichi and Tencent Video. Scales reported numbers last week, and yet got sold down. So far, we are seeing SPAC weakness all over, irrespective of their results. Financially, Scales reported revenues growing up 52%, $90 million. Gross profit grew $85 million since you can recall that Scales is actually just basically 95% gross margin like all games. So this is actually an interesting company. Despite losses, I'd say that the marketplace volume is growing very well. Balance sheet is strong, no debt, which actually suggests to us that the drop in Scales of $11 is not something to sneeze at, but more of a buying opportunity. Of course, it can go $10 or $9 with the continuous death of SPACs recently. Some news to say, Ford actually had a very good number. We are very bullish on their recent quarterly report, and this is just a snapshot of the Ford Argo AI, which is their test vehicle to become their robo-taxi fleet for the entire America. So far, SPACs have been experiencing more weakness. The SEC has raised their voice on SPACs, alerting sponsors, targets, and investors to regulatory risks, raising new concerns about SPAC-related disclosures. So just a few things about the recent SPACs. You could see that most of the SPACs are in conjunction with Biden's infrastructure bill. Showing to you a few of the SPACs, it's a 90, just to add all of these, so far the market cap of these are $100 billion in several companies. So a lot of the SPACs here that grew, that raised money, $100 billion since 2020, 47% EV transportation, $47 billion. $20 billion are in battery storage. $16 billion is in charging stations as a whole. Autonomous vehicles or self-driving taxi components or LiDARs are another another $15 billion, and yet $3 billion also for others, like that could be for renewable chemicals, for lithium, for biodegradable plastics, and so forth. So you could see that the market in general is very much in the infrastructure bill of Biden and has supported that for $100 billion. That is where almost all energy tech SPACs have been. As of June 30, 2021, it's $100 billion. Today, as of August, it could be about 90 or 80 billion, about 10 to 20% lower. But this is a market cap allocated for pure play renewable energy technology: EVs, battery storage, autonomous vehicles, charging stations, and so forth. So you can see that EVs are a bunch, whether that be for the likes of Rivian, Canoo, X-Fleet, Lordstown, Lucid, Fisker, Proterra, Lion Electric, LEV, Arrival, XL Fleet, and so forth. Most of these are very much less regulated. That's why the market is very skeptical about this type of SPAC investments. Of course, the big ones are your Teslas, Neos, XPengs, Li Auto, BYD, and even trucks. I'd have to say, though, that Proterra is worth watching in these earnings reports. In terms of BATS, Solid Power, they raised some money, and yet the revenues are, of course, within 5 to 6 years. So you could see that the market is quite very much skeptical about the revenue growth despite these huge numbers of 100 to 200 to 500%. And therefore, the SPAC weakness is more of just really asking and verifying whether QuantumScape, Microvast can do what they've promised. So we are seeing actually just generally the charging stations, charge point so far has 42,000 charge ports, and they want to actually be revenue positive by with growth rates of 60 to 100%. So their goal really is 500,000 charging stations. We'll see whether these companies and Biden's initiatives are going to happen. But so far, what we are seeing from the market is that they're generally less bullish on Biden's initiatives, as we could see drops after the announcement of infrastructure bill. Most of them actually got sold down, from ChargePoint to Volta, EVgo, la. So these are your SPACs and those companies in autonomous vehicle components. We saw generally good numbers from Laser, Velodyne LiDAR, Innoviz, Ouster, but the market still sold it off. So sentiment-wise, the market does not like infrastructure. Expect trading ranges for the entire EV sector as of the moment. Also, when stocks are oversold 80% from the highs, I took a look at some special names. I don't think they will go to all-time highs, but they would trade from negative 80% to negative 60%, which still means a 100% trading range, meaning from 10 going to 2, 2 can go to 4. So in general, QuantumScape right now, DouYu and EHang, which are all, 3 of them are down 80%. QuantumScape for the SPACs, Chinese companies like DouYu and EHang, eVTOL and live streaming getting pummeled down 80%. I do think that these stocks are actually giving about 100% trading range for the next 6 to 12 months, meaning QuantumScape 20, unlike it going to 10, I do think 20 goes 30 or 40. DouYu from 345, instead of going to $2, I do think it goes near 5, 6, 7. And EHang, instead of going to 20 or $10, goes further to 30 or $40. The DouYu market cap is volatile. You could see this name for the last 3 years has gone from $1.5 billion market cap to more than $6 billion, but is now trading at less than $1 billion market cap. Earnings results of DouYu later today, worth watching. Also, the other live streamer, Huya, $2.5 billion to $7.5. That type of range of 300% ranges within the last 3 years shows to me that buying near the lows of DouYu and Huya is actually worth a stab after an 80% decline. Another update for EHang, you could see that EHang will report this August 18 for their investor day. That could be a short-term catalyst for the stock to bounce from 20 to 24 all the way to about $30. Some updates, EHang has been used for high-rise fire rescue drills in Qingdao, China. They started their operations in their Yunfu production facility. This is going to help them grow their sales revenues. Announced completion of their EHang 216 technical exam. A lot of partnerships in Iberia Peninsula share their vision to Europe Viva Tech Conference and in Paris. So they've set up emergency channels to fight coronavirus in Guangdong, China. They've successfully conducted trial flights in Japan. EHang has expanded eVTOLs in general, and with Joby Aviation rising 30% on debut, my assumption is that if Tesla is doing well and NEO Xpeng actually caught up, I'd say that if Joby Aviation is getting bid at $7 billion market cap, EHang at just 15% of US's eVTOLs in terms of market cap is a definite value play in terms of the eVTOL coverage. For this one, ChargePoint and TPGY, I am bullish on these two in terms of charging stations. However, as market leaders, they have to execute. And for those investors who have ChargePoint and EV Box, I'd say continue to hold your positions with the trading range bias from about current levels of $24 for ChargePoint to go down to 20, but also to high of 30 to 34. For TPG, $15. So this is the ChargePoint chart, 20 to $30 from 60% down. I do think it's going to go 30% down or a big trading range. That is actually a 50% range for your ChargePoint. TPGY from $10 to as high as $15, from a negative 70% sell-off to at least negative 50% sell-off, because they will execute within the next 3 months all of their charging stations in Europe. So for Plug Power, it has fallen to $25. Just want to read to you some news. Last month, the wind power purchase agreement, opening a green hydrogen production facility. Shares fell, but actually we see this more as a positive movement on the fuel cell companies. So the power purchase power, this hydrogen plant will be the first and largest wind-supplied hydrogen project in US and the largest onshore wind power project across the globe. Once operational, they're expected to produce over 30 metric tons per day of clean liquid hydrogen. Renault said their Hivia joint venture to make hydrogen-powered vans was also underway, and the 3 models will be based on an all-electric version of the Master. They're also including an installation of hydrogen charging stations across Europe, supply of carbon-free hydrogen, as well as maintenance and management of fleets. In April, Baker Hughes also joined Plug Power and Chart Industries to establish a private fund that provides capital for large-scale clean hydrogen infrastructure projects. South Korean SK Group closed a $1.6 billion investment, with Plug Power expanding hydrogen energy in Asia and will launch this year. I'd have to say that despite weakness in most of these energy projects, renewable energy projects, we are actually more bullish rather than bearish, and we're more contrarian here. Citigroup also initiated a coverage buy on Plug Power with a target price of 35. As they said, analyst PJ Juvkar is saying it's leading the way in the nascent hydrogen economy. So Plug Power right now is actually trading at $25. We do think that this is more on the down area. The support is very here. Although it could fall to about $19, an equivalent drop last May, we do think it rallies back to $30, and it's actually more of a trading range rather than a continuous sell-off. So either 18 to 35 or 25 to 35. So far in the short term, a majority of these clean stocks, clean energy stocks, have been pummeled down. Okay, so questions. All right. So reopening names like Ashford, in my view, is just in a support area of $14. We don't see a negative sell-off to continue further. It's actually just gonna, in my view, it's just gonna consolidate. So as for this one, September to October, Ashford was just sleeping here about 14 to 16. Expect this to actually perhaps sleep from about 14 to 16. And then you never know, after reopening stocks all rise, it could rally here to as much as $50. This happened in a single day. So we do see it could happen within the next 6 months or a year. So we're not really bearish on Ashford here at $14. It looks to just consolidate in the short term. Thank you very much for listening, and hope that you got some news bits for the day. Thank you. Bye-bye.